Hello and welcome to episode 4 of Money Anonymous. I'm Kira Jones, financial coach and founder of Financial Intervention Academy. And in today's episode, we're going to be answering questions about a $50,000 cash windfall and what to do with it. What happens if you stop paying your credit cards? And a topic I have a feeling we're going to be covering a lot here in this episode's upside down auto loans. So let's dive right in.
Okay, so my mom just passed away and left me some money. I have quite a few debts. Should I put it all on the debts, put half away, or keep plugging away? So you got about $50,000 and the debts are car 5,900, credit card 29,500, credit card 8,000, and the loan 10,000. You have $400 in emergency savings, and you don't want to use it all on debt. You want to set your girls up with some of these funds, but you hate owing people. You're working, but you don't know for how long. All right, this is a great coaching example. So there's several things. I guess let me start with the black and white answer. Black and white answer, if we were Dave Ramsey, he'd be like, throw it all at the debt. You would almost be debt free if you were to put all that money. And then taking into consideration your income, now a lot of that income is freed up for you to start putting money away for your daughters, to build out that emergency fund. Now that you're not under the burden of so much debt, you'd be able to do those things. I honestly, again, instead of, do it this way, coaching would have you yes and this situation. And I'd also want to know some other things like what's important to you and what we already have established. Your girls sound very important to you. So, and taking care of their future sounds important. So, do we have insurances in place for them? You could possibly set them up with, CDs or a trust fund. So that way they do, there is some money set aside for them and it can grow. This would kind of get into the realm of consulting a financial advisor of how best to do this. But, as a coach, I would say, let's tackle some debt. Let's figure out which debts would give you the most progress to tackle first. The payment on the car or the loan, like how much is that payment? Could we knock those large payments out, or could we at least eliminate the credit card debt and fully fund the savings? Can we get you built up for a 3 to 6 months emergency fund first? More than likely, this $50,000, we're going to do a little bit of everything with it. You could also just throw it all in the stock market and invest it all, and get obviously a financial advisor to help you and advise you to do that the right way. So that way you can begin that nest egg. If you don't know for how much longer you're going to be working, you might need those retirement funds. So shucking them away where they can be building significant interest for you might be the way to go. But again, this is more like a black and white question that really there is no either or answer here. It's really a yes and getting some more information from your situation would help to make like a definitive answer for you. I try to yes and this, try to see how much of this that you can do. Doing a priority list, debt, or, your girls, or retirement, like kind of asking more questions to see what is honestly more important to you. If it's getting out of debt, then, maybe pay 70% towards debt and 30% towards other things. If feel like your girl's future is more important, then maybe you go that route. So again, there's a lot to unpack here, so much more than just a black and white answer. And this is what coaching really helps get in and identify. Drowning in credit card debt, the biggest ones for us are Discover cards. Is it wrong to just let them go into collections? I feel terrible, but sometimes it's deciding to buy groceries or pay the credit card bills. We're having a hard time paying our car insurance, let alone these. So that is very much kind of teetering on the edge of, financial crisis. I had 10 years of experience in debt collections. So I can tell you, although I didn't work directly for Discover, I had many friends that did, and have worked with many people who have found that their Discover collection account came back and sued them for non-payment. That is something that Discover and American Express are kind of more likely to do. But letting them go and default and go into collections, that does sort of like kind of stop the bleeding. Okay. Now it takes 6 months worth of non-payment for that account to get to a charge-off status. But at that point, the balance is no longer getting higher. The balance is what it is, and it's going to go to collections. Collections could be either with the original credit card. Discover actually handles their debts in-house once they charge off. They have pre-charge off collections and post-charge off collections, but they're all handled in-house. American Express, for example, a lot of times they'll outsource their non-charged off debt to third parties. So what I'm getting at is that you would have an option to make payments in collections. You talk to them and see, is there a way to make some payments? But if the account isn't charged off, and let's just say the account is closed, you're still getting interest and possibly fees attached to that account. It's only after charge off where that balance essentially kind of stops growing, and you can make a plan to tackle it at a later time. But this can give you obviously some breathing room in your finances, so you're not so paycheck to paycheck, and so freeing that up, it's a tough decision to make. Um, it sounds like there's other credit cards involved. So, um, is there a way to yes and this by working some extra hours? Can we call Discover Card? Actually, Discover Card really does. I think the reason why they get so harsh in their late stage collections is because they do try to offer really good payment plans. I got my interest down to 10% for a year, which helped me to kind of catch up when I was in a hard situation. When I was getting crushed by interest. The payment was too high. And, by the time that year was up at the 10% interest, I was able to make progress on that debt to when the interest went back up to its default. I think at the time was like 17 something, that it wasn't so much of an impact because I'd gotten that card paid down. So I just wasn't getting just bombarded with that interest fees. So I hope that helps. Again, this is a tough one to answer without having some more of those details. What other credit cards do you have? Um, and really kind of digging into the budget and, again, kind of what's more important to you. And paying car insurance is obviously more important than the credit cards. But to help you navigate the consequences of non-payment versus making progress, that's really a situation that's kind of meant for like individual coaching. I have a 2018 Jeep, a major problem car that I'm upside down about 11,000. More issues keep arising and I can't afford to get them fixed. I'm a single mom and I need something reliable. I'm at a loss on what to do. My credit took a hit when I left a domestic violence situation over the summer and I had some late payments. I want to get a safer, more reliable vehicle, but I'm at a loss on how to do so. Any suggestions? Okay. So many people are finding themselves upside down in their auto loans these days. So that is the core problem here, is that you have a loan and you're upside down in that loan, meaning you owe more than the vehicle is worth. So not only that being a problem, but you have this compounded problem that this vehicle just keeps having issues. So in addition to your large car payment, you keep having to pay for repairs and things that on a 2018, you probably shouldn't have to be paying tons and tons in repairs. Although this is kind of, I guess that would be about 5 years old. So, things might come up. Maybe consulting a mechanic, or a couple different mechanics to be like, hey, if I put the money into this vehicle with the mileage that it has, can we get this to being a reliable vehicle, or is it really just a money pit? So at which point, if it's really the money pit situation, you really have to figure out what to do about this underwater situation. So the amount that differs from what you owe versus what it's worth, that's going to be your first hurdle to tackle. You want to get a more reliable vehicle. That's going to be difficult without taking out a loan. And obviously you won't really be able to get a loan at this point with having a loan in this vehicle. So, the underwater vehicle situation is kind of one of the hardest that I see as clients, and especially from the collection side of things. And with working with clients recently, I have seen that a lot of creditors are starting to sue over these deficiency balances. So either your car was repoed or you surrendered it to the creditor. Either way, they auction it off and you're left with this balance, that whatever you still owe on the loan, you're still on the hook to pay that. And it can be thousands of dollars for an asset you don't even have anymore, which can also then hinder your ability to get a new vehicle. Um, I would honestly go the mechanic route here, maybe consult a couple different mechanics. Is there is this a money pit vehicle, or is there a way for you to spend the money and that, what's the mileage at? Like how much life does this vehicle have? Um, and so in that time, can you get through with this vehicle and kind of hustle and hustle your way to get the negative equity paid off? So can you get the loan paid down so that way your loan value is now equal to what you could sell it for? So if you can kind of hustle through that and then sell the vehicle where you can just kind of even wash, you sold it for what you owe, you pay off that debt, then you can go back to, I wouldn't recommend a dealership for financing, but, try local credit unions. They're often going to, be more likely to approve and with better interest rates, or community banks. I would definitely try that first as opposed to financing through the dealership. But and of course, if you could pay with cash would be much better. But you might not. At just getting out of this situation where you're underwater on the vehicle would be the first hurdle. And so then could you maybe get a cheaper vehicle, but you have a small loan that you can quickly pay off, and then you can start saving towards a more reliable vehicle. Or if you can get your income up and maybe you can take on a car payment again in the future on a vehicle that's more reliable. So again, starting to deal with that negative equity is going to be your first hurdle. And really getting some more information about this vehicle, get some professional eyes on this, and get more than one opinion on this vehicle.
Okay, that's it for episode 4 of Money Anonymous. If you would like to submit a question to be answered on a future episode, you can fill out the anonymous Google form in the description below. This is for educational purposes only. It's not meant to be financial advice because personal finance is just that. It's very personal. So if you have any experience with anything that we've discussed in today's video, please leave a comment, contribute to the conversation, because with more knowledge, we have more options, and that makes emergencies much smaller. So I'll see you in another episode, and be well, friends.